What is going on, guys? Mike Sancho here, back with part two, part dose for you on expert advisor assisted trading. So let me dive right in for you guys. All right. So it's been an interesting week in the markets. And you guys could be watching this video anytime, but we had some pretty major moves on some pairs, and some people got caught in some interesting drawdown, and even some people were over leveraged and learned some really valuable lessons. So I want to break down some advanced software management and how you guys can avoid getting your account in trouble, getting into serious drawdown, and potentially even having your account blown, right? Which is part of the game. Um, you know, you need to trade with risk capital and you need to be conservative. But if you are someone who has blown an account, I mean, that should never be a reason to give up. I blew many accounts when I first started trading manually. And really it's part of the game, guys. But it's something you can absolutely avoid if you're smart and you don't let greed take control. So what I have here on the charts, guys, is this pair euro Australian dollar, euro odd. Okay. And this is one of the pairs that was running this past week and a half. And I know people are going to watch this video like 6 months from now. They're not going to know the situation, but pretty much what happened here is the price just went up, and was not pulling back at all to cash out the profits. And as you guys know from the first video, from part one, or the last video you guys should have just watched, the software is ideally created for a ranging market where price is going up 50 pips, down 70 pips, up 100 pips, down 70 pips. But we can see here that price went up a good bit. So let's see how high it went up. Right, that's 350 pips up right there, without really any any type of retrace until here. So what you guys want to understand about the software, right, is that it uses this cost averaging strategy like we talked about in the last video. So this is the situation a lot of people found themselves in, especially when if they're running all default settings across the board, and especially on smaller accounts, this can be dangerous. If you're running, 6 pairs on like an $1,000 account with a range of 21, you guys are setting yourself up for disaster. And it's just because you don't know any better, and that's not necessarily your fault, but that's why we have these videos, so that you guys can learn more about the software, because at the end of the day, it's all in the settings. You can run settings that are going to get yourself in trouble, and you can run settings that are going to consistently grow your account. So understand, again, the Forex market is a risky place by nature. It's a shark-infested water. But we're going to help you wade through these waters. And real quick, before we get started, I'm going to pop over to this disclaimer, and you guys can go ahead and read through it. But essentially what it's telling you here is that trading carries risk, and when you enter the markets, you are agreeing to accept that risk, and you can absolutely make money and you can absolutely lose money. That's why it's very important to become educated and watch a video like this, so that you can learn smart things to do, and you can learn from people like me who have made mistake after mistake after mistake after mistake and lost thousands and thousands and thousands of dollars before I finally got it through my head the right way to do things. And the right way to do things is to be safe and consistent and slowly grow your money over time. Then you get to the big account, because when you get to the big account, you're good. You have a 20, 30, 40, $50,000 account. You make what? 20% on a $50,000 account in a month. You made $10,000 that month. I don't know many people who can't live comfortably on $10,000 a month, right? You can pretty much do whatever you want. So here's a slide for you. Okay. And this was one of the problem pairs that happened for people running these settings. And the software, it cost averages at a 1.5 times multiple. So each time as prices raising, and these are about 21 pips apart, right? They're not perfect. I just kind of, place them there to illustrate. Um, so it goes from 0.01 to 0.03, 0.05, 0.08, 0.12, 0.18, 0.27, 0.40, 0.6, 0.9. So at this point, if you're on a smaller account, you're going to be in some serious drawdown. And you can see by this guide over here, this is what the lot size is equal in dollars per pip amount. So you can see that this is about a 300 plus pip move. And I'm just going to add up these numbers. So we got 0.9 plus 0.6 plus 0.4 plus 0.27, 0.18, 0.12, 0.08, 0.05, 0.03, 0.01. So we're in a total 2.64 lots. So that's $26. Let me write this here. That's a lot. Okay, 2.64 lot equals $26.40 per pip. That's a lot. Okay. So if you're on $1,000 account and this is happening, you are not in good shape. $26.40. You go up 10 pips. Right, it's $264. So if you get here and whatever your drawdown is at this point, it goes up another 10 pips, your drawdown's adding on another $264. So you're taking on a lot of risk. So, this is really why we like to use that one ring, like we talked about in the last video. Write that here for you. So this is the best ring from my experience that you can be running on smaller accounts, guys. Some much safer ring. These pairs are much less volatile. Like Euro Odd, this is a very volatile pair. You can see it moves. It does these big moves in one direction, right? Euro USD. This is one of the pairs I've traded exclusively for close to a year with this strategy. One of the strategies I trade, and it very rarely goes past 200 pips without some sort of pullback. So that's where the software gets more dangerous. Not necessarily dangerous as long as your lot sizes are small enough to fit with your account. But you can see even just starting with a 0.01, once you hit that 1, 2, 3, 4, 5, 6, 7, 8, 9, that 10th trade, I mean, you can imagine what this would be at if we started at 0.02, it would be even higher. So if you're running 6 pairs, you really want to be on like a $5,000 to $10,000 plus account. And then I would be running my lot size, 0.01 per 2,000, per 3,000. You don't need to run it per 1,000. You can run it even more conservative. So, and also too, with the chart time frames, if you guys aren't aware, the 4-hour is more aggressive than the daily. Sometimes the 4-hour will actually double stack trade. So you would get like 2 sells here for 0.05, 2 sells for 0.08, 2 sells for 0.12. So it gets a lot riskier, and you can see, it puts the take profit in between, these areas. Usually as it's growing, as it's going up, it'll usually find a halfway point where everything's break even or slight profit or slight loss. So once this came all the way up here and then finally made, a pretty good drop, this is where it took out everybody's take profit. For everybody that was still in, some people got their accounts blown because they were over leveraged, and they didn't know what to do. They didn't know how to manage the software correctly, because there are ways, right? There's always ways for you guys to get yourself out of trouble, for you to manage this drawdown, but you need to understand your software. You need to understand the tool that you're using in order to manage it correctly. So what exactly do I mean by manage the software? How can I manage myself out of drawdown safely? Well, I'm going to show you guys, okay? So I created this handy little guide, and it's a software management plan, okay? So let's say you're starting at a range of 25, and this is just like, just a guide I put together. I mean, you could do this differently. You could, change the increases differently. But check this out, right? So if you are running more moderate settings or more aggressive settings, you're gonna need to monitor your software more. Don't the more risk you add on, the more hands-on the software is gonna be. And you can be very profitable running the software risky, but you're gonna have to be very hands-on, because if you run it risky and you expect to be hands-off, you're gonna blow your account, you're gonna get in trouble, right? Because we talked about this before. The software it's not magic, it's not a unicorn, right? It's not. So you need to know what you're doing, right? It's just like if I was, someone just threw me the keys to a Lamborghini, or let's say I threw a 12-year-old, or let's drop it down anymore. I give an 8-year-old keys to a Ferrari, and I said, "Here you go, kid, drive the Ferrari." Right? He has the tool, he has the vehicle, right? He has the ability to drive it, but does he know how to drive it? Is it going to be safe when an 8-year-old gets behind the wheel of a Ferrari or Lamborghini with no training and no idea how to drive? It's not a good idea, because that car is going to end up with some dents, if not completely totaled. So same thing with the software. If you have a very powerful software and someone hands you the keys to the software and says, "Here you go, make money with it," and you just slap it on your account and you just put random settings and you don't even know what they mean, well, you can potentially get your account pretty dinged up. So it's important to know what you're doing. Okay, and that's the point of these videos. That's why we have these software training calls every Wednesday. Usually Susan is doing these software calls. She's amazing, very experienced with the software, but we're doing these videos and these trainings to help you guys and to teach you the proper way to do it, because when you understand this stuff, it's totally life-changing. I guarantee it. So check this out, guys. Your starting range is 25, and again, the range is the distance between your cost average trades, right? So the default setting is about 21. So this would be if someone was running default, it'd be like every 21 pips to be taking a trade, but we're going to start with 25. It's a little more conservative, right? Because now it's every 25 pips the software will take a trade, okay? So let's say your account goes into 10% drawdown. What can we do now? How can we start to get out of this? Well, we can raise our range setting to 35. Now, if price is going up, it's taken on, let's say, 3 trades. We have a 25 range, so price has gone up 75 pips without a pullback. Now we're going to change our range to 35. So that means every 35 pips now it'll take a trade. So now over the next 70 pips, it only takes an extra 2 trades, versus if we had the original 25 and it was going up 75 pips, that's 3 trades. Let's say it went up like another 70 to 75 pips, that's another 3 trades. So it would go up the same distance, but now it only takes 2 trades instead of 3. And let's continue that. Let's say price keeps going up. Price has gone up 150 pips, and you're in about 20% drawdown. Well, we'll change this range to 45 now instead. So now every 45 pips, then it'll take another trade. So let's say it went up. Let's say we got in 3 trades. It went up 75 pips. Then it went up another 75. We got in another 2 trades. So now we're in 5 trades. Let's say it goes up like another 100 pips. Okay. So now we would have gotten in 2 more trades. So now we're in a total of 7 trades, and price has gone up about 250 pips, versus if we had stuck with 25, see how many trades we'd be in. 250 divided by 25, we'd be in 10 trades versus what we're in now, which is 3, 2, 2. Yeah, so we're in 7 trades now versus what would be 10 trades. Okay, and let's say, and you guys get the idea. So the higher the drawdown gets, the higher you raise your range, because the more extended price gets, the more likely it is to pull back, because it never goes in one direction forever. price never goes straight up for 1,000 pips and then up another 1,000 pips and then up another 1,000 pips. It doesn't do that. It literally moves in waves. Okay. See, I'm doing this cool thing with my hand. So what the market does. Okay. So you just got to go with the flow of the market and not fight it. You can't fight it, because if you try to fight it, it's going to win. It'll overpower you. So we just got to roll with the flow, roll with the punches, and we'll just raise our range. It's very simple, very easy to do. And you guys can do something different. Maybe you get into 10% drawdown. Maybe you want to change this to 40. Maybe you get in 20% drawdown. You want to change this to 50. 30% drawdown, 60. If you guys do this and manage it this way, you're never going to get here. You're never going to get to 60% drawdown, 50% drawdown, where you're starting to sweat and you're like, damn, my account's looking pretty rough right now, right? And yeah, like I said, the more it extends, the more likely it is to snap back, and it's going to snap back even harder. Think of like a rubber band or an elastic stretching. Okay, if you guys stretch out a rubber band, what happens when you let go of it? Right? It snaps back pretty hard. So the further you pull that rubber band, that's like the market going in one direction. It's like it's getting so extended that eventually it hits a point where it just snaps back, and that's where it hits your take profit. And you can see here, this is what happened, right? It went up, 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 like all the way up here. And then it reached a peak, and then within like a couple candles, right, this is a 190 pip drop, right? So it's all that stress, going up, 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 and then it pulled back, and that's where you hit your take profit. So you can see this is 10 trades. If we had followed that management plan, maybe we'd only be in 7 trades. So our max lot size would be a 0.27, because each time, right, it multiplies by 1.5. So when you get to the 8, 9, 10, 11, 12th trade, the software is throwing some fatty lots, because it's expecting price to snap back, right? Because it never goes in one direction forever. That's the whole idea behind the software. And you can start it at 30, guys, too. If you want to be even safer, you can start this at 30, change this to 40, 50, 60, 70, 80. But if you guys do this, it's going to keep you safe. Don't wait until you're already in 60% drawdown, 70% drawdown to then start adjusting range, because I guarantee at that point, your software has already been throwing some pretty big lot sizes, okay? And there's another thing I want to talk about with you guys in terms of your weekly goals, because I'm seeing people, they have these insane weekly goals, right? I'm seeing people with like 20% weekly goals. So I just want to show you guys what this looks like compounded. So you're going to just change this word month. Imagine this is week, okay? And imagine this is week. Percent per week, number of weeks, okay? It's the same thing. It's a calculator. It's going to work the same exact way. So let's pretend we're doing 20% a week over 52 weeks, over 1 year, because this is what some of you guys are doing. I see people with 20% weekly goals, and I'm just scratching my head. Look at this, 13 million, right? Do you guys think that it's realistic for $1,000 to turn into 13 million in 1 year, right? If I can guess what your face looks like right now, I'd guess that your face would be shaking your head, because it's not realistic. I don't know anybody turning $1,000 into 13 million in a year. And if it was that easy, guess what? Everyone would be doing it. What would this look like in 2 years? Let's see if it even goes to that number. Yeah, guys. You guys think this is realistic? I'm not even going to try and figure out what number that is. It's like something trillion. But no, not realistic. Let's check out 15% and see if this is realistic, because I see people with 15% weekly goals. 1.4 million. $1,000 to 1.4 million in a quick 12 months. Ever heard of get rich quick? Yeah, that's what this looks like. It's not realistic. Not realistic. Let's try 10. 142,000, slightly more realistic slash achievable. It is, but I'd still say pushing it non-realistic. This is more what I would shoot for with the software. Okay, $12,600. Starting with $1,000, guys. $1,000 is not a lot of money. If you're watching this and you don't have $1,000, number one, you need to get a job. Number two, you need to get a second job or a third job. You need to drive for Uber. You need to drive for Lyft. You need to drive Uber Eats. You need to drive Postmates. The issue isn't in the software or anything else. The issue is in you not having income. Okay. So what you need to do is go out and create an income, or you need to light a fire under your butt and start recruiting and building residuals for this. Okay. $1,000 is not hard to come up with. Although there may be people watching this in some countries who have less opportunity. I'm not as much as speaking to those people. I'm directing this more towards people that live in the United States or other countries that have lots and lots of opportunity, but people like to, work 40 hours a week and then tell me life is hard, can't come up with any money, bills this, bills that. Well, at that point, sorry to say it, but you're just lazy. When I was working, I used to work 2-3 jobs at once. I would work 100-hour weeks. I would work 7 days a week. I just did whatever it took, and that's why I'm in the position that I'm in. But some people aren't, willing to do whatever it takes. They'd rather make mistakes, because if you guys aren't aware, each and every one of us is a millionaire. You either have $1 million or a million excuses as to why you're not. So, number one, get a job. This is kind of off topic, but really, I mean, $1,000 is really not hard to come up with. And guys, if you drive Uber 10 hours a week, let's say you made like $20 an hour on average. You made $20 an hour times 10 hours a week. It's extra $200 a week. That's an extra $800 a month. And this is money that you can invest into your software, and then you're going to speed up the rate of compounding. And if you're working 10 hours a week, maybe that's 5 hours on a Saturday, 5 hours on a Sunday. Or you could even split it up, maybe 3 hours a night, 3 nights a week. So that's really only a couple rides. It just depends, who wants to be free and who wants to live a life of their dreams. I'm not sure. It's up to you guys. But anyways, this is a much more realistic number that's achievable. $1,000 to $1,200. That's an amazing return in terms of percentages. And some people will look at that and they say, well, it's only $12,000. And the same people that say that are the ones who are going to keep their money in the bank, where they get less than 1% a year. So I don't really follow the logic there. You're only paying $169 a month for this service, which in my opinion is extremely undervalued and very cheap for this software. This same software that hedge funds use. We have exclusive rights to it, but some people will tell me $169 a month is too expensive, but I guess that's a matter of perspective. So $169 a month times 12 months is $2,000. Minus your $1,000, you're in the blue, about $9,600 over a year. This is assuming you did not take any money out and you did not invest any money, because if you're starting with $1,000 or less, I would really recommend that you continue depositing money into this account so that you can speed up the rate of your compounding. I would also recommend you refer your 3 people. That way you can get your software for free. Very easy to do. And I mean, I'd actually, recommend that you build the business, because it's a very easy business to build. Product sells itself. You add people to a Facebook group, they see results and they join, and then we pay you residual income that you can reinvest into your software. So in turn, it's essentially a wealth acceleration vehicle for you. But let's check out what this turns into in year 2, so you guys can see an illustration of how adding more money to your account speeds up the rate of compounding and helps you hit the exponential curve even faster. Okay, so by year 2, 169,000. This is, in my mind, is very realistic. Okay, let's check out year 3. Okay, 2 million. See, the problem is people try to go from this to this in 6 months, when really you should be trying to do this in 3 to 4 years. Okay, guys, so you're going to get there. Take your time, go slow. When you try to rush the process, when you try to get greedy, when you over leverage your software, when you get in situations like this and it brings you back to zero, you got to start over from scratch. Every time you start over, you start the compound calculator from the very beginning, right? So you may get, pretty far fast, but it's going to take you right back. You may get to month 6 in 2 months, but it's going to take you right back to square one. And then how many times are you going to go back to square one until you learn the lesson? And I want to show you guys a slide from my presentation, I did at the Atlanta convention that we just had. And if you guys are watching this in the future, we just had our first economy event in Atlanta. It was amazing. We had an amazing turnout, really set the precedent for this company and where we're headed. And we're about to hit some amazing trajectory with this company. We're about to go into the compound effect ourselves, but these are what I like to call the evolution of a trader. These are the 4 phases of a trader, guys. And you can see number 1, this is the humbling phase. This guy looking pretty rough. Looks like he just blew an account. This is where the market will humble you. And this is something I learned manually trading. I put my life savings into an account, and I made $25,000 disappear in about a day. It was a really cool magic trick I just wanted to do. I just wanted to make my money disappear. So, because I thought that I would just turn that into $100,000 instantly and then quit my job. But the market humbled me. And then I said to myself, well, if I can lose 25 grand in a day, then I can make 25 grand in a day. So, I kept going on the path, and I'm glad I did. There are people that will blow accounts. There are people that will use the software. They'll blow an account. They're going to blame the software. They're going to blame the company. They're going to quit, and then they're going to solidify their loss as a loss. And then there's people that are going to blow the software or blow their account using the software, and they're going to say, well, I was probably over leveraged, or maybe this setting was this, or they're going to try and understand it. They're going to try and understand it instead of giving up. They're gonna understand it. They're gonna let the market humble them, realize that their goals or their settings are probably too much, and then they're going to get into the smarter phase and start learning about the software, start learning how to adjust things, keep their drawdown safe, manage their settings properly, be out of the markets on certain days, not try to trade Sunday through Friday and squeeze every little ounce of profit you can out of the market. Just all the bad things that pro traders and veterans will tell you to stay away from, because trading is really for the opportunistic guys. It's kind of like an opportunistic hunter. I like to relate trading a lot to like a tiger hunting or a lion hunting, and you're in the savannah, and lions, when they hunt, they don't go after every little thing they see. They don't go after every animal they see. No, they're opportunistic hunters. So what they do is they wait for the perfect time before they pounce and attack and kill and get their neck and do their thing. Yeah, that's how they kill. When a lion does it, if you guys have watched National Geographic or Animal Planet, I would highly recommend it. You guys can learn some great lessons from nature, right? It translates into a lot of what we do. So same thing with trading. You need to be opportunistic, and this is really important in manually trading, especially. You're waiting for the easy trade. You're waiting for the perfect setup. You're not forcing trade after trade after trade, right? Because if the lion or the tiger or the cheetah or the jaguar is chasing after every single animal they possibly can and not waiting for those easy kills, those easy setups, right? They're going to lose all their energy. They're going to drain themselves. They're going to be tired, and they're not going to catch anything. They're not going to catch any meal. They're not going to eat, and they're going to starve. So it's the same thing in trading. If you're sitting there and you're trying to get every bit of profit you can out of the market, and you're trying to you have 20% weekly goals, and you have your lot size jacked up, and you're running 6 rings, and you're running it Sunday through Friday, and you're running it through news, and you don't use the news filter, and you're on $1,000 account because you're trying to flip it to $10,000. well, get ready to be humbled. And I mean, the market it doesn't care about you. It's going to teach you the same lesson over and 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 over again. And if you guys are sitting here and you're like, I just blew an account, I lost $1,000, I lost $3,000, I lost $5,000, I lost $10,000. Guess what? You, you you just paid a different price for the same lesson. You guys paid, if you blew $1,000 account, you paid $1,000 price for a lesson that cost me $30,000. So you really got a discount if you think of it that way. And it's cost some people even more. I know, one guy, it's even cost him up to $300,000 before he learned these types of lessons. So if you're sitting here and you lost less than 5 figures to learn this lesson, I'd consider yourself lucky. I really would. So yeah, don't be a quitter. Don't let the L take you out of the game. How you get better in Forex is really by losing, because now you learn what not to do. It's really the best way to learn. And preferably this phase takes place on a demo account, right? Preferably it should for most people, so they can see the power of the markets and, how everything works. But it's not the reality for everybody. Not everybody has the luxury of learning this lesson on a demo account. So you got that. Then you start taking control of your software. You become competent. You understand small, consistent, conservative compounding. Over time, you just say, you know what, enough is enough. I'm just going to do this the right way. I'm going to grow slow, 3 to 5% a week. And I'm just going to grow it. And I'm going to reinvest into it. Because then, when you get to that 30, 40, 50, $100,000 account, that's it. You won. Okay. And then you hit that expert phase. That's where you're at. You're like this guy, you're sitting here, you're laughing. You're like, man, life is easy. Life is good. I'm making all this money, in these markets. You got it made. So don't rush the process, because the more you rush it, the more you're going to get back to phase one. You're going to constantly get here. You're going to get ahead, because there's people all the time. I see them, they've been trading maybe, a couple months, and they think they got it all figured out. They're saying, I've got the best settings. I know what works best. The software is like, this is the best settings that work, blah, 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 blah. And they're running aggressive settings. And yeah, the market's been ranging pretty nicely, so it's working well. And then boom, news event hits, one pair goes up $400, accounts blown, back to square one, back to zero. And then they turn around, the software sucks, this and that, economy, this person told me to run these settings, this and that. And it's like, no. Slow it down. You need to take accountability for yourself. You need to take accountability for your own account. When you finally stop pointing the finger at other people in life is when you're going to find success. When you look in the mirror and you say, if it is to be, it's up to me, that's when you're going to find your success. If you even think of or bring someone else's name or a company or anything into the reason why you're not successful or why you're not where you want to be, you're not mature enough and you're not ready for it. Okay? Self-accountability is the only form of accountability. You need to take control of your own life. You need to take control of your software. You need to take control of your settings, and you need to take control of your trading account. Do that, life's going to be good. So back to the training. So what we figured out so far is, when price goes a long way in one direction, it's going to get pretty dangerous. So we learned how to manage it, how to cut down on the drawdown with the software management plan, where we raise the range setting. Sorry guys, I'm trying to get comfy here. Ugh. I just did 2 other calls before this for like the past 2 hours. So, and I just drove like 7 hours today. So it's been a long day, but I want to get this video out to you guys so that you have the keys that you need to be successful. Okay, guys? So what we want to do, we want to start small, and we have these updated settings for you guys in the training site. So these are the market hackers tested settings. This is really what people should be using when they start. These are for accounts under $5,000. If you're going to run conservative settings, you're going to run these 3 pairs. You're going to run it on daily time frame. You're going to use 0.01 per 1,000. And again, you can use less than that. If you have like $2,000 in the account and you want to use 0.01 per 2,000, feel free. You can always add on risk at any time, guys, but it's hard to take the risk away once you've already gotten yourself in a risky situation. It's hard to come back from that. But you can always be like, oh, okay, like it's not really making that much money. I've only made, 1 or 2%, in the past week and a half. I've only taken on like 1% drawdown, 2% drawdown. I think I'm going to raise it up. That's totally cool, guys. It's so much easier to do that than to get yourself in a tough situation where you're like, I'm in 70% drawdown. What do I do? And you don't even understand the software. You don't understand trading. You don't even know what's going on. So everyone should be starting here. And also with the equity protector, when you start running on demo, you're going to set this at 100 because this is going to take away the equity protection. The equity protection, again, guys, is when your drawdown hits that certain level, it's going to close out all your trades and protect your account at that level. So if you put 40% or 40 as your EP, that means when your account hits 40% drawdown, 40% negative floating trade balance, it's going to close out everything, protect your account at a 40% loss. Not always a bad thing, but me personally, I run mine at 100. I don't like having one, but some people do. But you want to start running it with 100 when you're testing on demo, so you can see with your settings, how much drawdown you take on and what's normal. And you probably want to do this over an extended period of time because the markets are really ever changing and nothing's really what I would consider normal in trading, but there are these moves that happen from time to time. So you want to see, the fluctuation between drawdowns, and then you want to set something that's comfortable where you'd be okay losing that amount, or you can be like me and you can say, I'm just going to give the software room to work. I know that my settings are conservative. I know that if it takes on 30 or 40% drawdown, the market's going to be extremely extended. I'm following my software management plan. I know that it's going to snap back, and then you can do that, right? And you don't need to use it, but it's up to each person. Some people want to use it, okay? And then you have moderate settings, which would be a 0.02 or like a 21 range, even lower. Again, the more moderate you go, the more aggressive you go. This is the more hands-on you're getting. So be prepared to watch your account and monitor it and make adjustments if you need to. Okay, and this is again, even this is moderate for accounts over 5,000. So me personally, don't use 6 pairs under 5K. You can do very well with 3. When you add on 6, this is a lot of pairs. You can see, this is what just happened on 1 pair, right? You guys have 6 pairs, all cost averaging at one time. You guys can see how the lot sizes average out in terms of dollar per pip, right? So it's a lot of risk when you have 6 pairs and they're all cost averaging. So, raise the range settings, right? You can have a range of 30, you can have a range of 35 and be running 6 pairs. You don't have to run this tight of a range. You guys can play with these settings. This is ultimately your software, but you're going to determine how risky you want to get. Okay, and then this is getting into really aggressive stuff, guys, and high risk here with the 4-hour time frame. If you're confused on which settings to use, stick with conservative, all right? Like I said, you can always add on risk, but test everything on a demo account first. That way you can get humbled for those settings on demo account first before you need to learn. So I think that's pretty much what I wanted to cover. We touched on everything. You really just want to avoid these situations. If you follow this software management plan, you're going to be good. And if you stick to the 3 pairs for smaller accounts,